Welcome to the Green Zone Podcast, the show that teaches oil and gas executives how to take command of their finances and live in the green. Your host, Jeff Green from Green Financial Group, will be your financial guide, all while giving you a tour of the most beloved and best-kept secret spots around Houston, Texas. Now, on to the show.
Hello, and welcome to the Green Zone. With us are Jeff Green of Green Financial Group. And Jeff, you've got somebody else with you, a first-timer? Tell me about this.
I do.
Tell me.
Yeah, first-timer, Lauren Smith. Lauren is a partner here, CFP, MBA. She's the smartest person in the office, basically. So I thought I'd need her on this podcast right now because I don't come across as all that intelligent, but she will.
Well,
that's
Lauren,
quite the introduction.
I was going to say, Lauren, you've got something to stand up to now, okay?
We'll see if I can live up to it.
All right. Well, let's jump right in. Now, Jeff, you say you provide a comprehensive approach to a financial life. What do you mean by that?
Well, you know, a lot of advisors out there will say they provide this holistic approach to financial planning. I'm not even really sure what that means, but they're good at saying that. But they're not always good at delivering it. I would say we're just the opposite. We're awful at getting that message out there to people, but we're very good at delivering it. And what I mean by that is we offer so many different services. There's really 11 main areas that we cover. And you want me to just go down all the list of that 11 real quick?
Let's take a couple and then maybe we'll have Lauren jump in too, because we can't give you the whole podcast.
Well, that's true.
Yeah.
You wouldn't want to listen to me all the time anyway. So really the first thing that we do when we work with a client is go over their family financial overview. And we want to clarify their values, their goals, their objectives, identify whatever immediate financial priorities that there are. And we start to create that organization there with their financial life, and not just their financial life, but their personal life, what they're going through at that time. If there's any liquidity events going on in their life, if there any family events going on in their life, we don't want to know about these things because they incorporate really into their overall financial picture.
And it's not just, where they are right now, it's where they want to be also. So goals in the future, retirement plans, that dream retirement house out there that's 10, 15 years down the line. It's kind of looking at everything, the current situation, but also looking at where you want to be in the future. So
this is really a work-life component to this plan.
Absolutely.
Okay.
Yeah, so that's a great point. So when we do a plan, it's not a one-time event. Our plan, there's forecast and then there's reality. And, a plan is just a forecast. And every year, we redo our clients' financial plans because we have to reconcile that forecast with reality. If we've projected one return and we've, achieved, maybe a much lower return or maybe a much higher return, how does that affect us? And we want to make sure that whatever family events have happened throughout the course of that year. And again, it's not that we just do it once a year. We're, it's basically a quarterly update with our clients, but yearly we're going to redo that plan. We're going to redo that comprehensive plan for our clients.
And this can be an approach that is used by anyone in any industry, any time of life?
Yeah, I think so. I mean, obviously we specialize in oil and gas, but this really pertains to anybody.
Okay. All right. Do you really have to start this at a young age, or can you do it any time?
Well, the earlier the better, always. Our clients tend to be going through the retirement phase of life. But certainly, we've talked with clients for 10 years prior to their retirement, and we do things with them. We go over their benefits plan, for example. If there's certain things they need to be doing, contributing more to an after-tax type component in their plan, then we help identify those needs and encourage our clients to do so.
All right.
And I think, every stage of life has different questions and concerns, whether you're younger and you're trying to figure out if you can buy that first house or how you're going to put your kids through school. There's planning that needs to be done for that. In addition to, retirees that need to answer the question of, can I afford to retire? What do the next 30 years of my life look like now that I won't be working? So, really everybody needs a plan no matter what the stage is. There's just different, main focuses depending on what point of life you're in.
Gotcha. Now, you had a list of some other bullet points you wanted to bring up there, Jeff.
Well, yeah. So we want our clients to live their ideal lifestyle. And in order to do that, again, we have to come back and understand the values, the goals, the priorities of the family that we're talking to. And once we get those down, we'll identify sources of income, optimize spending and savings and all that stuff. And then what we do is implement what we call the Green Zone financial plan. And that is the heart really of what we do. And it encompasses the cash flow analysis. And while we're not tax advisors, it does encompass a tax planning component to that, because you can't, it's like a Rubik's Cube. You can't, you don't want to fix one thing and mess up something else on the other side. So the tax component, the cash flow component, certainly the wealth management, the asset management, the estate management, these are all things that come into play when we're talking with clients and helping them develop a plan and a clear path to their ideal lifestyle.
Okay. Lauren?
Yeah, I have to agree.
And I'll also add this. When we work a lot with retirees, for example, and they have a very complex benefits plan. And one of the things, if we get to them early enough and we start looking at how their plan is currently structured, what they're allocating where, what they're contributing, what may be contributing back in their plan, then we're able to start developing strategies up until the retirement. I know, for example, they have, net unrealized appreciation, NUA, as it's called in our industry, is a big deal with some companies because it allows you to pull your company's stock out of your plan, okay, pay tax based on the cost basis of that stock and not the market value of that stock. So it is a big savings, tax savings. That's part of the tax planning that we do. And again, we always have our clients run these strategies by their tax advisor just to verify that what we're saying is correct. But it's a way, one of the examples of just how we can help a client pull some assets outside of tax deferred plans, get it on the outside for as inexpensively tax-wise as possible.
All right.
And this is also something, you want to plan for because you only have one shot at NUA, for example, and you want to make sure that you've got a plan going into it and that one opportunity to get the stock out of your plan is done correctly and by someone who really knows, how to help you.
So what are some of the other things on your list there, Jeff?
Well, certainly liability management, making sure, are their mortgages structured properly, securities-based lines of credit, insurance. Insurance with retirees is kind of I don't say it's not controversial, but it's subject to interpretation. For example, if you're a retiree and you have $1 million, you've had this $1 million life insurance policy during your working years, that's great. That was there designed to protect your loved ones financially should something happen to you with a main wage earner, for example. When you go to retirement, now is that $1 million that they're still paying into, for example, is that still necessary? Oftentimes it is not because a retiree is now self-insured. They have the assets that they're going to live the rest of their life on. In other words, they've gone from the labor side of capitalism to the capital side of capitalism, right? So they're not working long and hard for their money any longer. Now their money is working long and hard for them. Right. So the insurance becomes more of an estate planning component than it does of an income replacing component. Does that make sense? Tell
me a little bit more about that. Yeah.
Well, so you've got estate tax exemptions of $11+ million. I think it's about 11.5. Correct me if I'm wrong. I think it just changed in 20. But you combine that with another spouse, as each individual gets that, then your estate's, the estate tax exemption is up in the $22 million range. Not everybody has that kind of an estate. So it's not really, so the insurance would be used to replace wealth that would be otherwise spent in estate taxes. We don't have that problem that we used to have based on tax law changes in recent years, as big of a problem as we used to have anyway. So the insurance component is no longer really, the life insurance is, in many cases anyway, that we find is not as necessary as one might think it is.
But
so because they become self-insured, they fall under the estate tax exemption, and they don't have to replace the wealth that is being spent in estate taxes.
And yet, as you pointed out, it can play another role too.
Absolutely. It's also, it's an income replacer during our working years. So certainly, I'm in my working years. I have life insurance to protect, my family in case, something happens to me and the wages are lost. And most working people do. And that's how it is. It's when we go to retirement, when we go to the capital side of labor, then, that life insurance component isn't quite as necessary from an income replacement standpoint.
All right, gotcha. Keep going down your list. This is great.
Well, certainly the retirement plans, those are updated on an annual basis, like I said. We do a lot of relationship management as well. And relationship management for us means a couple of things. Again, we count among our clients some of our best friends. And that's a relationship. And we develop that relationship at painstakingly. We want to get to know our clients very, very well. That is a relationship. Another relationship management component, though, is the relationship with their other advisors. For example, their life insurance guy, their CPA, their tax advisor, their estate attorney. We have relationships with their people. If they don't have a CPA or an estate attorney, then we can certainly recommend a couple to them. But we want to make sure that we have a relationship with them as well, and information is free flowing so that we're all serving our one client.
All right. Lauren, how about you?
Let's see, what else haven't we talked about? Another real big area that we focus on with clients is Social Security. And I know a lot of people have a lot of questions with Social Security. There's a lot of conflicting information out there of, when do I take it? Is it early? Is it late? When does my spouse take it? How much do we get? So there's a lot of planning that we do within Social Security. And it's looking at it more than just Social Security. It's looking at the whole picture. If you're taking Social Security, how does that factor into the entire financial plan? If you're not, if you don't take Social Security at 62, where are you getting that money? Maybe you're pulling it from your IRA that's then taxed at 100% versus Social Security that's taxed up to 85%. So there's a lot to look at, and it's not a one size fits all. It depends on your current situation, looking at life expectancy. And if you have a history of longevity, that comes into place too. There's a lot of different components. So we take a lot of care in looking at Social Security, analyzing it, and not just looking at it alone, but looking at it with your whole financial.
Lauren brings up a great point, because most retirees out there, they're all going to go listen to a Social Security expert. Almost all of them do. And I encourage it. Go listen to them. The problem with Social Security experts is they look at Social Security in a vacuum. They just look at Social Security, and they don't take into account the whole picture, like Lauren points out. Because let's say our Social Security check is $30,000 a year. Okay, that's what we're getting in Social Security. At full benefit age, that's what we're going to get. Well, prior to full benefit age, we still need that $30,000. So where are we going to get it from? Well, we're going to have to pull down from our nest egg. In other words, we're going to start killing the goose that's laying the golden egg by pulling that, what could be Social Security money, out of the plan. Now, sometimes that's the best thing to do. Sometimes it's not. Again, it's not a one size fits all, as Lauren points out. It is an individual situation and requires analysis based on everyone's individual needs.
And let me just say, this sounds like it takes time to develop, time to really research and get into. Someone's not going to be able to come in, sit down with you, and then walk out with a completely finished plan.
No.
Right.
No, it does take a series of meetings to go through and get everything done. We'll meet with people. Everyone has their own yellow brick road. We certainly will guide our clients and prospective clients down that yellow brick road, but some want to take more time, some want to get it done quicker, and we help accommodate that.
All right. Keep going. You got that list there.
Another thing that I think is really important for our clients, especially as retirees, is just the cash flow management. They've been working for the last 40 years of their lives, getting a paycheck every month from the same company into their bank account, never having to think of where's the rent going to come from? Where am I going to pull that from? So once you retire, that paycheck's not coming in anymore. So it's important for us to look and decide, what the most optimal spot to pull the money from every month. Is it taking it out of an IRA? Is it pulling it from a bank account? What's the best from a tax standpoint, from a, income standpoint? There's a lot of thought that goes into that. And it's not the same every year. There might be some years where there's a Roth conversion and money comes out of the IRA and into the Roth. And there's just a lot from a cash flow planning standpoint that needs to be looked at.
And do you ever have someone who looks at you and says, no, I don't want to do that?
Sure. I mean, all we can do is give you the facts and figures. I'll give you a great example of that. Almost every retiree comes in and says, Jeff, I want to pay off the house. And we'll say, why? Why do you want to do that? Well, because I don't want that debt, and I'm going to feel better about doing that. And I'll say, okay, well, here's what's your interest rate? Let's say their interest rate is in the 3.5% range, as many of them are today, 3.5 to high threes. Some debt, in some cases, is a good thing. Okay. I know that recent tax law changes have reduced the amount that we can write off mortgage interest wise, but we still get a write off on our taxes mortgage interest wise. And, part of the way of looking at this is, let's say we're paying a 3.5% return or 3.5% interest rate on our mortgage. If we feel that we can earn more than 3.5% on average long-term in the marketplace, it might make more sense to keep the mortgage and put those dollars that we would have paid off the house into the market so that we're earning greater than what we're paying in interest. Does that make sense?
Absolutely. Keep going.
So we get that question a lot. And again, all we can do is point out the facts and figures. That's it. That we can show you the pros and cons of the decisions that you're going to make. Ultimately, our client is the boss. And what we cannot change is their peace of mind. If their peace of mind says, pay the house off, I'm going to feel better, then guess what? We pay the house off. They feel better when we work our plan back around what they're wanting to do.
All right. What else you got there?
So really, one of the last thing and the main thing that I want to make sure that we get out there is our person-to-person interaction, our interaction and our relationship with our clients. I mean, we monitor changes in their life, in their family situation. We're very proactive in keeping in touch with our clients. We keep them on track. We help them identify shortfalls. We have clients that, sometimes they spend a little more money than what they told us they were going to spend in the plan. And we have to tell them, look, I know you're retired and I know every day seems like Saturday to you, but we built a plan based on this and you might be exceeding it just a little bit. So there are times we have to be honest with our clients. We have to tell them what, the pros and cons of the decisions that they are making.
And I think, one big aspect also is just acting as a financial sounding board for our clients, just someone to pick up the phone and call and say, hey, I want to buy a car. Is it smart to put this much down? Is it smarter to lease? Should I buy? What should the payments be? Just having that peace of mind of knowing that there's someone you can call that's going to give you an unbiased answer, look at how it fits into your whole financial plan. I think that's something that's really important for a lot of clients.
Yeah, we have clients that are on their sixth last new car that they're ever going to buy.
Well, it sounds like this goes a long way toward building confidence and trust. If they come to you and they want to buy a car and they've said, well, we're not going to do it anymore, and they're still coming back, it sounds like you've got them.
Well, we try to help them a little bit.
Yeah. Now, you folks had some white papers you were talking about. Why don't you tell me about that?
Yeah, so, everything that we talked about here today, we got three, papers here. If you want to learn about what we do, or even want to find, I have a page here, 50 things a financial professional, in particular us, that we will do for you. If you want that, there's a link on the page. Click on that. It'll take you to where you can download the 11 wealth management services that we offer. You can certainly get that. We also have a client bill of rights. We believe strongly that our clients have rights with us. So we have created a client bill of rights that our clients get and are certainly honored. So when you come do business with us, you've got rights with us, and we want you to know those. You want those things? There's a link somewhere on this podcast page. Click that, and it'll take you to a download page where you can download that information.
All right. Now, do you have a web page there?
We sure do. It's greenfinancialgrp.com. So www.greenfinancialgrp.com.
All right. Let's see. Jeff and Lauren, is there any other final word for today?
No, make it a great day. Seize the day.
All right. Carpe diem it is.
Carpe diem.
Yep. Thanks, Jeff Green and Lauren Smith of Green Financial Group, for helping us a little way down that yellow brick road. It's very easy to subscribe to this podcast, too. Just use the subscriber button, which is right on this page. And there's also a share button. That makes it quick and simple to start a conversation with colleagues and friends. I'm Patrice Sikora, and let's talk again later.
Thank you for listening to the Green Zone Podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views and opinions of Green Financial Group. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Securities offered through Raymond James Financial Services, Inc., member FINRA SIPC. Investment advisory services offered through Raymond James Financial Services Advisors, Inc. Green Financial Group is not a registered broker-dealer and is independent of Raymond James Financial Services. Jeff Green is the founder of Green Financial Group and is a registered principal of RJFS. The Green Financial Group is located at 6363 Woodway Drive, Suite 625, Houston, Texas, 77057, and can be reached at 713-244-3030. Raymond James is not affiliated with and does not endorse the opinions or services of his guests.
Investing involves risk, and you may incur a profit or loss regardless of the strategy selected. These examples are hypothetical, and the situations presented are only examples and are not intended as investment advice. Please consult your financial advisor if you have questions about these examples and how they relate to your own financial situation. Raymond James Financial Services Incorporated does not provide advice on tax, legal, or mortgage issues.